This is what I mean. This is what I mean. I mean, we're having a conversation. Hold up. Hold on a minute. Listen, everybody. Hey, y'all.
Very important right now for you to take 1 second and hit that like button. Help push us through the YouTube algorithm. And then it's also equally as important to pound on that bell notification, hit that bell notification and click all. That way you stay up to date on all my latest videos as the inflationary depression that I've been warning of opinions, because I am not a financial advisor. This is just my overall thesis of the market, right? And as we get into it now, you can see
Go crypto investing, and as you do know, we're still anticipating quite the ride today. The volatility will pick up here shortly as we work our way closer and closer towards the Fed meeting. I believe the Fed meeting minutes come out at 2 p.m. Eastern, and then I believe Jerome Powell does his press conference at 2:30 Eastern. And between 1:45 and 3 o'clock, you're going to see a lot of volatility. As you're already seeing some volatility in the dollar today, if we take a look at the U.S. dollar, if the market interprets the language like we were talking about earlier, hit that subscribe button, the bell notification, to get all your latest breaking news on Fed policy and fiscal policy that drive this nation and dictate the financial markets, your portfolio, the gold and silver bullion, and the crypto market. You got to hit that bell notification, right? You don't want to miss any of these updates. We do them once a week, and we lay it out there for you with the Fed. And if the markets take this as bullish for the equity markets and bullish for stocks, it would be bearish for the dollar, and you would see a dollar sell-off today, right? And right now, you got your 100-day moving average at about 108.85. You got the 200-day moving average at about 105.184, right? And then you got major support down here. If you draw, let me get this. If you draw this all the way over to here from your old resistance support line, you can see it lines up pretty nice with major support and resistance over here, right? See that? All back here. This was your last major resistance. Whoops. That was your last major resistance. That's not what we want to do. I want to get rid of that. That was your last major resistance right here before you came down, and then the Fed started to pump. And we know this red line right here is when the Fed started to tighten, and this green line right here is when the Fed started to ease. When they started printing money, you can see the dollar collapse. As they started talking about tightening, the dollar rounded a bottom, and the buyers or the bulls started taking over the market, and the sellers or the bears started to get exhausted, leading up into this nice rounding bottom up until the Fed did its first rate hike, and then we've accelerated to the upside. And we do think we probably come into 120.322, right? But if the markets take today as this is bearish for the dollar and bullish for the equities and stocks and crypto, this would probably drive all the way down to the 105.184, right? It would at least come down to 108, which would be a pretty big move down from where you're at now. That would be a from current price industry exclusive measuring tool. That would be a 2% move down, and that's a pretty big move for the dollar if that happened in a day or two, which I believe it would, or as much as a 5.5 to 10% move down. If they see this as very bearish for the dollar, it would drive all the way back down this major support level. It used to be major resistance, right at the 101.113. But I think it's more than likely it's going to do what it's been doing, and that's the macro time frame. Let's move into the micro time frame. I think what it would more than likely do is do what it's been doing on the last few pumps in the stocks and in the dollar and the crypto. If this gets bearish and drives down, it might come down into this area like this and then gather some support, and then 6 to 10 days later trading, it starts to trade back to the upside, right? And and then you work your way towards that 120, and that's kind of what's been happening the last few times. The dollar dips, stocks pump, and then a few days later after that they stable out, and then they come back to the downside and make new lows. So I'd still expect the dollar to eventually in the next month and a half to end up at 120, but we're going to pay attention and see what exactly happens with the volatility that I expect and that will happen, because the last 6 rate hikes this year there has been major volatility. And then if we take a look at the 10-year Treasury down here, you can see it's down a little bit off its highs. And as you do know, the 10-year Treasury, old Vincenzo, has a 10-year government bond manipulated since 1980 with interest rates as hyperinflation started to take over. I expect prices to move up here on a huge move over the next couple of years, 6/6/2021. And we have, where we mean by here is all the way up there at 10.5%. And you can see everybody thought I was crazy, and this is the manipulation. And in a big bear market, in this falling channel that 10-year bonds have been in since the government started manipulating down after the financial crisis of the late 70s, of the hyperinflation nearly, and then major recession, double severe recessions in the early 80s, came inflation as they jacked rates up to nearly 20%. And then that is a technical target up here at the top of this rising channel on a breakout. And you can see after the big COVID dump right here, old Vincenzo made that forecast back down in here that the price would come up into here, right, all the way up into here at 11.760%, or this 10.265% right in that range right here. And now you can see we've actually crossed over 4.16%. And since old Vincenzo made that prediction in 6/6, March, April, May, June, it was right in here somewhere, at current price, almost 200% up in the bond price. So Vincenzo's giving you this information. And what I'm looking at in the 10-year bonds now in the daily, that's the macro. Let's look at the micro. Is if you come down on a retest, and you can see we made this so long ago, we have these ugly looking price notes. Oh, we want a price note. On some kind of consolidation, you would see the 2.99, so it's about 3% range. And then even a bullish consolidation, you could come all the way down as far as 2.299%, and that would still be a bullish consolidation. Because you slut, I didn't want to delete that, because this right here is old major resistance back in the history of this falling channel, right? If we went back here all the way to 1980, multiple times, see there's some more right there would be hit as upper resistance. So you could even come all the way down here in a consolidation, and that would still be very bullish as long as you held this level. But a healthier consolidation might be something like that, and then the buyers come back in and you drive the interest rates up, or not even the buyers, but the Fed continues to jack rates up, as this is just intraday market move and market shuffling and whatnot. So that's what that's looking like. But you can see, again, old Vincenzo kept you out of that a year ago, telling you interest rates were going to rise. And then if you knew interest rates were going to rise, and then the interest rates actually did rise, you knew in your education level, and that's what we're